What's going on, everyone? Aztecs. This is just going to be an installment of, I guess, Traders Talk, where I'm just going about my day charting, and I just want to talk about maybe something that I've seen, or some things that I think are worth clearing up, or things that I think could help people simply just while I'm charting throughout the day. And today we're going to talk about the concept of break even, why I think it's wrong for many different reasons, and often an indication that someone probably isn't trading long term successfully because of the factors that are brought into it. I guess off the bat, I would say obviously there's going to be times where you do, you know, essentially put quote unquote your stops break even. Doesn't define it as risk free, but it just defines that you're happy to just exit that position if it gets back to price. That will happen. But the concept of doing it nearly every trade is fundamentally flawed. So you go into a trade and you're looking at, let's just say, you're entering on a support. Now, price moving off 1% from support and then back to your entry shouldn't define what, why does that mean that you should be break even? That doesn't invalidate your setup. At least it shouldn't, unless unless there's clear signs that you think, all right, price shouldn't have got back there, then I'll do that. But for the most part, the times I see it is simply because people don't want to give back money. But you can't ever move your stops based on not wanting to lose money, because then there's no system to your, there's no thought process, there's no system. When we're entering a trade, it's for a reason, right? Whether it be that we're entering on some sort of sweep, on some sort of support, the reason you're entering is because you feel like it's a solid position to then target upside or downside. Now, this price action could, essentially bounce 1%, hit your entry, multiple times through the day, especially if it's a higher time frame swing, and then move to your position, and then you'll probably be the first to say, "Oh man, shouldn't have done that." It makes little sense in terms of thought process, and then you have to bring in the fact, and this is one of the biggest things, and it's one of the things that annoy me the most. You have to take into account fees as well. So, like, the term risk-free is flawed on many levels. Let's just say I open a position. It might cost me, $200 to open this position, right? Then I put my stops break even. Well, I can't do that anyway, because then I'm going to get marketed out. So then not only do I pay fees, I then pay extra on being brought out by market, which then I run the risks of, a deeper liquidity drop. And especially if you're, dumping a little bit, then it'll even get a bigger drop by market. So then all of a sudden you might be down $300 off the bat on fees, even though you said break even, and then that skews statistics as well. Like, I feel like if you're not incorporating what you're paying on fees in your trading, then I can't see how you're profitable. It makes no sense in that terms, So again, I would try to exercise caution on that front. Get familiar with entering a trade, playing the full setup, because you could probably do a data run of looking at what happened to these trades that I closed break even. What was the outcome after? Did it run to my TPs and I closed break even simply because I wanted to protect a 1% move? Like, it infuriates me that it's so popular, like everywhere in crypto. Like, the full process of it makes no sense, and it's something that you should aim to break. If you feel like you're too attached to the money and you don't want to give that back, then size down until you're more comfortable. But I just wanted to talk about that in terms of break even and how, for me, it makes little sense. We can do a quick little run through here on the market. Obviously, we've had a nice response from the 29.9 level. Obviously we're just ranging. Structurally hasn't really changed much. We're still like stuck in this area here. Hasn't closed yet. We've got 30 minutes until this closes, but hasn't actually taken out the previous candle and got above that anyway to force a squeeze. If we do squeeze, I'm probably looking at 30.6 and potentially going up towards the 31 region. But for now, we're still stuck under the 50 RSI. So for the long as this chops, you know, I think I would bet on downside overall. We can look at Ethereum on a higher time frame. Obviously, we've just had this uptrend into range highs. This weekly candle is a concern. I'd be very cautious of betting on upside until we get stronger movements on both ETH and BTC for upside. Scenarios I'm looking at is obviously a retest maybe of this and similar for BTC. Sure, I have it on the chart somewhere. But similar on BTC when we look at just a trend perspective, you're basically hoping that this continues. Obviously, to the 28 region would be the first big test for me here. If we do pull back, that would be the big test, because I do think if we accept under this, like it could get messy. But 28 and then 26.5 area is going to be the two big tests if we do pull back. If we don't pull back and we continue to chop here, I'm just looking for that confirmed break above 31.2 to 31.5. Like hold above that, then good. But we have to take into account of all the good news we had this week and then put in this. I like to think that when you put in a lot of work to try and break a range high and you don't, it's quite often that you'll then slam the range lows. So I'm not looking to do too much at the moment. Happy to sit on my hands and be safe. Hopefully this helps, and take care.